Let's do some questions on bad debt and provision based treatment with regard to debtors. Let's begin with this one. We have debtors of rupees 1 lakh. We have bad debts of 10,000. And the adjustments, case 1 says that there is additional bad debts of rupees 2,000. Let's start with case 1. First, post the items in the trial balance into our balance sheet extract and P&L extract. The first item is debtors of 1 lakh. That's an asset. I would write in my balance sheet on the asset side. Debtors is 1 lakh. The next item in my trial balance is bad debts of rupees 10,000. Bad debts of 10,000 being expense, I would write it in my profit and loss account on the debit side as bad debts 10,000. So the trial balance is correctly posted. This bad debt of 10,000, I don't have to deduct it from my debtors. Why? It is already deducted. They've already passed the journal entry bad debts to debtors. That is the reason bad debts is appearing in trial balance and it will be written only to P&L. Now in the case 1, in the adjustment, if they additionally mention that the bad debts is 2,000, it is over and about 10. There is bad debts of. So what is the journal entry for bad debts? Bad debt to debtors, P&L to bad debts. Both the entries are to be passed. Why should we pass both the entries? Because they have not passed. That is the reason it's not appearing in trial balance. It's been given in adjustment. I would write bad debt as an expense, making my total bad debts as 12. I would further deduct that bad debts from my debtors, making my debtors 98. This is the answer for case 1, where debtors of 1 lakh is there in trial balance, bad debts of 10,000 is there in trial balance, and in adjustments they've given there is additional bad debts of. The same thing can be given slightly differently. Even if they mention total bad debts amounted to 12, it means already we have recorded bad debts of 10. Totally the bad debts is 12, meaning additional bad debts is 2. So the case 2, though the question is different, answer is same to same as case 1. There's nothing new about it. Let's do another new question. Take down this question. Come on, let's now solve this second AQ. We'll solve each of the 7 cases, one case at a time. Begin with the first case. Debtors is rupees 1 lakh. So in my balance sheet, I would write my debtors on the asset side at rupees 1 lakh. After I write my debtors at rupees 1 lakh in the balance sheet, then in the trial balance, I have bad debts of 10,000. Bad debts of 10,000 will be written in our profit and loss account on the debit side. I hope you got it. What else do we have on our trial balance? Provision for bad debts 8,000. Provision for bad debts is a liability. I would write it in my balance sheet on the liability side 8,000. This is how it should be. Bad debt of 10,000 is already deducted from debtors. They passed the journal entry. That's the reason bad debt has appeared in trial balance, and that's the reason why I am not deducting it now. I'm only rating it as an expense. Provision is already charged to P&L. It's already created in the last year, but I have to record only liability. I need not record it as an expense. I hope you understood. Read the adjustment. No other information. That's it. Case 1, there is no other information. This is it. We've got it all right. All that we need to do after this is this provision being shown on the liability side will be now posted to asset side as a matter of presentation. Provision is shown on the liability side. It belongs to the same family of debtors. Instead of writing this provision on the liability side, I will reduce it from my debtors 8, making it 92. This is how it look in the first case. Can we now proceed to second case? Trial balance for the second case is also exactly same. Debtors is 1 lakh, bad debt is 10,000, provision is 8,000, exactly same. Case 2 mentions that provision is to be maintained at 10,000. We'll come to adjustment later. Shall I first write debtors 1 lakh in balance sheet, bad debts 10,000 in P&L, provision 8,000 in balance sheet liability side? Yes, I would have to. I would write debtors 1 lakh. As per trial balance, it's 1 lakh. I've written it here. Bad debts, as per trial balance, it's 10,000. I've written 10,000 as it is. No change. Provision, as per trial balance, is 10,000. I've written, sorry, 8,000. I've written that 8,000 also. I don't have to deduct bad debts from debtors because it's already deducted. I don't have to write provision to P&L because it's already charged in previous year, and this year it's only a liability. It's not created in this year. This is data from trial balance. Now I'll read what is given in case 2. What does case 2 say? Provision is to be maintained at 10,000. When they say this provision of 8 is to be maintained at 10, provision has to become 10. How does 8 become 10? You have to add 2. You have to add that 2000 is provisional additionally created during the year. 2000 is the provision additionally created during the year. Remember our concept video. I mentioned it to you. The provision is to be maintained and existing provision should be compared. How much is the provision to be maintained? 10. What is existing provision? 8. Which is more? To be maintained is more. So existing provision is 8. It has to be increased to 10. Meaning additionally we have to create provision of 2. Can I say that additionally we have to create provision of 2? When we are additionally creating provision of 2000, that additional provision creation, when you create it, it is an expense. Once you create it, it's a liability. When you create the provision, it is an expenditure. Once you create it, it is a liability. When I'm creating it, I will add it here in my P&L as an expense, 2000. Once I create it, it's become liability. That's it. We're done. But provision is a liability, I agree, but it is created against this specific asset called debtors. As a matter of presentation, when we're closing the balance sheet, instead of writing provision on the liability side, I would shift it to asset side. It will be visible as a negative 10,000 amount, which if I deduct, my debtors will become 90,000 in the outer column. I hope everybody got it. Let's go to case 3. What does case 3 has to say? Case 3 is saying provision is to be maintained at 10%. In case 2, I told you a specific amount. In case 3, we are not talking about a specific amount. I'm telling you specific percentage, the extent to which debtors has to be, sorry, provision has to be maintained. First, we'll go with the simple basic item from trial balance. Where do I write this debtors? Balance sheet, asset side. Where do I write this bad debts? P&L account, debit side. Where do I write this provision? Balance sheet, liability. Understood? Let's write these 3 items. Then read the adjustment. Come on. I'll write balance sheet, asset side. I would write debtors in lakh inner column. P&L account, debit side. I would write bad debts 10,000. Balance sheet, liability side. I'll write provision 8. Everything's clear? Now let's read the adjustment. What does it say? It says provision is to be maintained at 10%. What is the rate at which provision is to be maintained? Debtors after deducting bad debts is 1 lakh. It's already deducted. On that 1 lakh, you apply 10%. So provision has to be maintained at 10,000. If there is no existing provision, full 10,000 provision has to be created. It's an expense and liability. But in this case, there is an existing provision. Compare the provision to be maintained with existing provision. Compare the provision to be maintained with existing provision. How much is the provision to be maintained? On 1 lakh, 10%, 10,000. Am I right? How much is the existing provision? 8,000. So existing provision of 8 has to become 10. What should I do? Increase it. Can I say I need to add the provision by 2? This addition to liability is creation of provision. When we create provision, it's an expense, 2000 in P&L. Once you create it, it becomes liability, increasing 8 to 10. Everything's done. One thing that I would have to remember now is provision is a liability, yes, but it is created against a specific asset. As a matter of presentation, it will be no longer shown on the liability side. It will be shown as a reduction from the asset data. From 1 lakh deduct 10,000, we get 90,000. From 1 lakh, when you deduct 10,000, you end up getting 90,000. Did everybody get this? That's with regard to case 3. Let's go to case 4. Case 4, they're telling provision is to be maintained at 7,000. But let's keep that adjustment aside for some time. We'll start with debtors 1 lakh, balance sheet asset. Bad debts 10,000, P&L expense. Provision 8,000, balance sheet liability. I'll first post the items from trial balances. Shall I? We're doing case 4 where the provision is to be maintained at 7,000. Balance sheet asset side. I would write my debtors as 1 lakh. And P&L account debit side, I will write my bad debts as 10,000. Balance sheet liability side, I'll write my provision as 8. I've written the data from my trial balance clearly. Now I'll read the adjustment. What is the adjustment saying? Adjustment is saying that the provision is to be maintained at 7. If the provision is to be maintained at 7, if there is no provision, I will create full 7,000 provision. If there is no provision, I will create full 7,000 provision, expense and liability. But there is existing provision. I need to compare the provision to be maintained with existing provision. What is the provision to be maintained? 7,000. What is the existing provision? 8,000. There is already provision of 8. I would have to maintain it at 7. What should I do? Bring this 8 down by 1. So it is not creation of provision in this case. We are writing off 1,000 provision. When you create provision, it is an expense and liability. When you write off provision, it will reduce the liability, it will become income. When you create provision, it's an expense when you create, and once you create, it's liability. When you write off provision, liability will reduce and that will become income. And this 1,000 rupees reduction in liability, that is reduction in provision, will become income. I'll write in profit and loss account credit side 1,000. I'll write in my profit and loss account credit side 1,000. That is provision for bad debts written off. Provision for bad debts written off. I hope you all understood. The last point that I want you to notice, when we wrote provision in our balance sheet liability side, 7,000 rupees, it's fine, but this provision is created against a specific asset debtors. So I would shift it from my liability side to asset side, deduct it from my debtors and make my debtors 93 for the sake of presentation. That's the last shot. I hope you understood case 4. Let's now go to case 5. In case 5, what are they asking us to do? There are two things. One, additionally, bad debts figured out is 1,000. Further, provision is to be maintained at 8,500. You know, right, what we have in our trial balance? First, we'll write that as it is. What do we have in our trial balance? We have bad debt. We have debtors. How much debtors? 1 lakh. I will write it as it is. And in our trial balance, we have bad debts. That I would write in P&L account debit side. How much is that? 10,000. I don't have to deduct this 10,000 from my debtors. Why? This debtors, this bad debts of 10,000 is appearing in trial balance, meaning it's already reduced from debtors. I don't have to deduct it now. I hope you got it. Then provision for bad debts. As per the trial balance is 8,000. I don't have to write this 8,000 in my P&L. I'll only write this as a liability because this is not 8,000 provision created current year. This is 8,000 provision created last year. Last year when they created 8,000 provision, they've already charged it P&L. And after creation of provision, it will become a liability. This is liability brought down from last year to current year, which I'm writing. I hope everybody understood. Now come to adjustment. What does it say? Additional bad debts 1,000. Is this bad debts additional 1,000? Is it there in our trial balance? No. So it's an item which is missed out in entries. Now we have to create bad debts. Basically, we need to book it as an expense, charge it to P&L, also reduce it from our debtors. We need to pass the journal entry. Bad debt to debtors. When I write bad debt to debtors, debtors will reduce by 1,000, making it 99. And this 1,000 bad debt to debtor entry is over. Next, P&L to bad debt. I need to write it in my P&L. Additionally, bad debts 1,000, making my total bad debts 11,000. 10,000 was already recorded. 1,000 rupees is additional bad debts. Total bad debts 11,000. 10,000 of bad debts is already deducted from debtors. We don't have to deduct it now. 1,000 rupees bad debts has to be freshly deducted from debtors, which I just did. Then I have provision to be maintained at what amount? 8,500. When they say provision has to be maintained at 8,500, if in case there was no provision, I would have created 8,500 provision, wrote it as an expense and wrote it as a liability. But there is an existing provision. I told you, whenever there is existing provision, compare the provision to be maintained with the existing provision. How much is the existing provision? 8,000. How much is the provision to be maintained? 8,500. Existing provision 8,000. Provision to be maintained So should I increase the provision or decrease it? Increase. From 8,000, I would have to increase my provision to 8,500. 500 rupees, I would have to create additional provision. That 500 of additional provision that I'm creating will become expense. So I'll write it in P&L account debit side. And once I create that expense, it will become liability, increasing my provision existing 8,000 to be maintained 8,500. By this I'm done. But as a matter of presentation, I don't have to show provision for bad debts on liability side. It will be shifted to asset side and I'll deduct it from debtors, making my debtors look at 90,500 rupees amount. But my debtors is still 99,000. My provision is 8,500. Did everyone understand this? Can we go to case 6? What's happening in case 6? Additional bad debts is 1,000 and provision is to be maintained at 10%. This is exactly same like what we similar to what we did in the previous case. And the trial balance is same. What is trial balance? Debtors 1 lakh, balance sheet asset, bad debts 10,000, P&L expense, provision 8,000. It will be balance sheet liability. Shall I write these three items? I would write here debtors 1 lakh. And I would also write my bad debts 10,000. Further, I would write balance sheet liability provision 8. This is as per trial balance. Now read the adjustment. What does it say? There is additional bad debts of rupees 1,000. Additionally, there is bad debts of rupees 1,000. Additional bad debts means they have not recorded it yet. We should record. We should book the expense, also reduce our debtors. I need to pass both the entries. Bad debt account debit to debtors, reducing my debtors by 1,000, making it 99. And this being an expense, I have to transfer it to P&L. P&L to bad debts. So I'll add it to my bad debts, making my total bad debts 11,000. So I hope you understood reduction in debtors as well as expense being booked to P&L. Next, we have provision to be maintained at 10%. At what rate should we maintain the provision? 10%. How much is debtors? 99,000. I need to maintain debt provision for doubtful debts as a percentage of closing debtors after deducting bad debts. We've discussed this in the previous part. I hope you remember. Closing debtors 1 lakh. After deducting additional bad debts 1,000, 99,000. On 99,000 compute 10%. 9,900 should be our provision for bad debts. But it's already there to the extent of 8,000. Provision to be maintained 9,900. Provision existing 8,000. Existing provision of 8,000 is not sufficient. We have to additionally create 1,900. If this 8,000 existing provision was not there, full 9,900 would have been the provision that I'm creating during the current period, expense and liability. But 8,000 is existing provision, 9,900 is the provision to be maintained. So we have to create provision of 1,900. 1,900 provision to be created will appear in our P&L account debit side, 1,900, and I would write it here 1,900, making it 9,900. When you create it, it is an expense. Once you create it, it's a liability. Same statement is what we discussed in the past. Now, what you have to know is, as a matter of presentation, I won't show my provision on the liability side anymore. I would shift it to my asset side, deduct it here, making my debtors 89,100 rupees. I hope you understood case 6, where we are having additional bad debts and provision is maintained as a percentage. We'll do the last case, case 7. There is bad debts of 1,000 and provision has to be maintained at 5%. There is bad debts of 1,000 and provision has to be maintained at 5%. This is exactly for the same trial balance what we used in the past. What is our trial balance items? By now it would have become very known to you people. What is our trial balance saying? It says there is debtors of 1 lakh, there is bad debts of 10,000, there is provision of 8,000. Shall we first post our trial balance data? Come on, let's write first our trial balance data. I would write in my balance sheet on the asset side debtors of 1 lakh. And in our P&L account on the debit side, I would write bad debts 10,000. And on the liability side, I will write provision for bad debts 8,000. This is the data from the trial balance I posted as it is. Now, I don't have to deduct this bad debt from my debtors because it's already deducted. I don't have to write this provision in my P&L because it was previously created and debited as an expense. Now it is recorded only as a liability. Now read, additional bad debts is 1,000. How much is additional bad debts? What is the journal entry for additional bad debts? Bad debt to debtors. It is not yet reduced from debtors. Now I'll reduce it from my debtors. Bad debts 1,000, making it 99,000. And this bad debt will become an expense which I'll write in my P&L account debit side. I will add it to my existing 10,000 bad debts, making it 11. Because journal entry was not passed, I treated it as an expense, recorded the expense, also reduced it from my debtors. I hope you got it. Provision has to be maintained at 5%. 5% is an accounting estimate. This 5% provision has to be created on the closing debtors after deducting actual bad debts. How much is our debtors? 1 lakh. How much is the additional bad debts? 1,000. From closing debtors of 1 lakh, after I deduct that 1,000, I have 99,000. On 99,000, I have to create provision of 5%. How much is it? 4,950. 4,950 is the provision to be maintained. If in case there was no provision in trial balance, I would have debited 4,950 to P&L account as expense and I would have written 4,950 in my balance sheet liability side. But because there is existing provision, I have to compare. What is my existing provision? 8,000. What is the provision to be maintained as a percentage? 4,950. We already have 8,000 provision, but the provision to be maintained is 4,950. From 8,000, I'll reduce it to 4,950. From 8,000, I'll reduce it to 4,950. How much is the provision to be written off? 3050. This is not a door number, this is an amount. 3,050 rupees of provision is to be written off. Provision, when you create it, it is an expense. Once you create it, it's a liability. When you write it off, it is reduction in liability, resulting in reversal of expense, which is income. When you create provision, it's an expense. Once created, it's a liability. When you write it off, it is reduction in liability, resulting in income or reversal of expense. This 3,050 reduction in our provision of 8,000, reducing it to 4,950 is an income. I'll write it in my profit and loss account credit side, provision written off. Provision for bad debts written off 3,050. By this, we are done with everything. Only point that I should note is because provision is a liability, I've written on the liability side. However, because it relates to an asset, we have to eliminate it from the liability side. And as a matter of presentation, I would deduct it from my asset of 99,000, making my debtors become 94,050. Did you get it? This is the logical way of presenting debtors with bad debts, sometime in trial balance, sometime additionally given in adjustment, provision, sometime in trial balance, and sometime off the trial balance in adjustment. Please don't use your some rude formula of bad debts plus provision plus old provision minus new provision or plus new provision minus old provision. Please don't do that. Please use your brains and then apply it this way. I hope you got it.